I want to talk about my favorite ETF that I use for my investing strategy and then just how to start with it. The good news is how to start with it is very, very basic, assuming you can type in 3 letters, then your broker will pull it up for you. If you're interested in any sort of broker, if you're so new that you don't even have a broker, I'll put a link down below for a broker that where if you sign up with them, you'll actually get free stocks, whatever the promotion is. But I should also note that that's an affiliate link. So I will also get something too, just to be upfront with you in that regard. But anyways, let's actually focus on this ETF and how, to me, it makes a lot of sense. I'm not saying that you need to do it. I'm not saying that this is the holy grail. I'm not saying that it's perfect. But for a beginner, I think it's something that will make sense to you. And when things make sense from an investing standpoint, that's always the right, or a good first step in the right direction. So let's just focus on what is an ETF. An ETF is basically like a mutual fund. It's a bunch of individual stocks that get thrown into a single ticker symbol. And again, a ticker symbol is just those letters. So for example, Apple's ticker symbol would be AAPL. Netflix's ticker symbol would be NFLX. So that's what a ticker symbol is. But an ETF is just a ticker symbol. But then within the ticker symbol, there's a bunch of other different individual stocks and such that, are used to create that actual ticker. So I'm not going to waste your time anymore. I'm just going to get right to it. Not that I was already wasting your time, but I don't want to waste your time is what I was trying to say there. Hopefully you don't think I've been wasting your time. But the ticker symbol is VIG. And the way the ticker symbol works is this. It is made up of a bunch of companies, okay? So you have these companies. I realize those look like houses, but there's a bunch of companies, right? And these companies do what is known as paying a dividend, right? So these companies pay a dividend. And if you're not sure what a dividend is, I'll put a link down below I go really into depth about what a dividend is. But just for this video's sake, they just pay you as, basically a thank you for holding to the share, for holding onto their share. So you invest, and then based on per share. So if you have 100 shares, then for every one of those shares, they will pay you a certain amount of money over, different time frames. So just to keep the math super easy, if a company pays a $1 per share dividend and you have 100 shares, well then $1 per share dividend and you owning 100 shares, $1 times 100 means they would actually pay you $100, basically as a thank you for saying, hey, thank you for being an investor. That's how I like to envision it. They're appreciative. They want you to continue to stay an investor in order to, basically it's a bribe too, right? It's a thank you bribe. They're bribing you to say, listen, don't sell the shares, invest. In fact, maybe even buy more shares. But think about it. In order to pay a dividend, what does that company need to be able to have? Well, they need to be able to have cash, right? Okay, well, in order to have lots of cash where they can just literally send out money as thank yous and bribes, what kind of company would need to be able to do that? Well, in order to have cash to do that, you have to be somewhat of a successful company, right? Is that fair logic? Hopefully that's logic that you can think, that you can think through, right? If in order for a company to pay a dividend, you need cash. In order for a company to have cash, you got to be a good, solid company. But that's not all. Not only do companies pay dividends, but in this situation, they have a track record of raising the dividend. Meaning that year after year, they're saying, hey, you know what? We know we used to pay you $1, so we'll take it with that. But you know what? This year, we're going to pay you $1.25. And then another year goes by. Hey, you know what? Because again, thank you, we're appreciative, we want to bribe you. We're going to pay you $1.50. The next year goes by. You know what? We're going to pay you $2 per share. The next year goes by. You know what? We're going to pay you $2.25. But do you notice what's going on? Well, when they were raising the dividend, you were getting more and more money. But again, what needs to be going on here? Not only do they need cash, right, to pay the dividend, but they must be having some good solid success if they're not only able to pay the dividend, but start raising the dividend. Is that valid? Is that a good thought process? Is that easy logic to follow? Hopefully it is. But one more thing. Not only are they raising the dividend, but VIG wants the company to have a 10-year record. So in other words, at minimum, the company has had to have raised the dividend for 10 years straight. I mean, think about that. 10 years straight of just, we'll pay you more. Not just we'll pay you, but you know what? We're going to pay you even more. The next year goes by. You know what? We're going to pay you even more. And that's had to happen for at least 10 years. Now, believe it or not, there are some companies out there that have done this for 25, 35, 45, over 50 years. In fact, there's a couple that have 60 years. Think about that. 60 straight years of not only paying you, bribing, but continuing to raise the dividend, raise the bribe, raise the thank you, however you can visualize that. That's pretty impressive. So is it safe to say that companies that are able to perform in this manner no, nothing's guaranteed. I'm not saying that, but do you think they're likely? Do you think they're, the odds, the chances of them being able to stick through some tough times are there? Yeah, absolutely. Again, nothing's guaranteed, but that's why it's that's why it's an ETF, meaning there is diversification within it. But as a whole, that's what's making up this sort of ETF. And I think, to me, that makes a whole lot of sense. Wow. Yeah, if companies can not only pay a dividend, but continue to pay more and more year after year, those must be not guaranteed companies, but some good, solid companies. And just for an example, when you start to think about what companies would be involved in there, Coca-Cola. Who hasn't heard of Coca-Cola? How about, when you think about shampoo, toothbrush, deodorant, all that sort of stuff, that would be Procter & Gamble. That's the name of the company. Now, that you probably might not heard of the company, but that's what they do. They make shampoos and soaps and deodorants and laundry detergents, right? Stuff that people just need. So are these like big old tech stocks that are, oh man, that's cool? No, they're just kind of boring. How about, do you like electricity? Do you like water? Do you like to heat your home in the wintertime? How about utility stocks, right? But nothing fancy, kind of boring actually, like water, electricity. But you know what? Yeah, they're able to just pay and pay and pay because in some ways they have a monopoly on the market, right? And those are the types of companies that are going to be in there. If you're looking for like, woohoo, yeah, oh, glitter and glamour and all of that, I'm not saying you can't have some of that in your portfolio. But again, as far as this video is concerned, how to start, I would say, you know what? Start with VIG. Do some more research into it. But this is a great ETF where if you're looking to get started investing and you're not looking to, buy and sell within a day or a couple weeks or really even a couple years. I have VIG and I don't plan on selling it for years, if ever, because VIG in and of itself pays a dividend. So while you hold all these other stocks that pay a dividend, VIG will also pay you a dividend, which works the exact same way. So just consider that ETF. I think it's a great starting point. Once again, am I saying it's the holy grail? Am I saying that it is bulletproof? That just does not exist. But to me, it makes sense. Hopefully to you, it makes sense on why the sorts of companies that make it up would be a good starting point for somebody that's a beginner in their investing and just wanting to get started. And the smartest way possible, and to my mind, the easy way possible, because I think this line of logic makes a whole lot of sense. You can't pay a dividend unless you have cash. You don't have cash as a business unless you're actually good at selling your product or service. And these companies, and you definitely aren't able to continue to pay more and more and more year after year after year for minimum 10 years in a row. If again, you're not really good at selling your products and services. Then off the top of my head, another one that would fall in this category, I don't know, have you ever heard of a McDonald's? I don't know, maybe you've heard of them. I don't know, some people, but you see McDonald's, are they an exciting company? Not really, but you know what? They're really good at being McDonald's, which has allowed them to fit into this category also. So hopefully this helps. If you have any questions, comments, leave those down below. Also, if you enjoy videos like this, then a very time-efficient way to communicate that to me, please just hit that like button or just leave a quick comment below. Hey, thanks, Clay, something like that. And that way, I know that my time is being spent the right way to put videos like this together. And then finally, check out the channel as a whole. Good variety of videos. Hopefully you decide to hit that subscribe button, as I would love to have you as a subscriber to the channel. But yeah, get out there as a starter, looking to invest. Consider VIG, do a little bit more research on it, and I think you'll like what you see, and hopefully it makes good sense to you. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.